Welcome back to this tutorial on financial modeling using Kaluta projection methodology. Last time in lesson number 5 we ended up adding expenses, administrative and marketing expenses into financials. For expenses, when you have an expense item, you debit expense and you credit cash. In this case, all the transactions were on cash basis thus far. So when you debit a cost transaction, at the end of the month you close that account and transfer to profit and loss account. So ultimately the transactions were captured in profit and loss as debit and cash as credit, and that's what we modeled in our financials. Now let me go to the working sheet here and start to model for credit sales and credit purchases and other non-cash items. Okay, so as I said, so far we have, let me first of all select this area, a good number of it, so that I format this. Okay, up to here. So I use this 1, 2, 3 icon to format with this comma, and then I repeat again to remove decimal places twice, and then I go to numbering and use negative numbers second formats in red, so that we can see what we are doing. Right now let's model credit sales. That means we are modeling the debtors. So I double tap here, writing debtors. So we will have the opening stock, followed by credit sales, followed by bad debts, followed by debtors collection, followed by bad debts, and lastly we have closing stock. not closing stock, actually it is closing balance, and here not opening stock, rather opening balance, because we are modeling the debtors. Okay, so thus far we have made assumption that all our sales are on cash basis. Let us now assume that 60% of our sales are on cash basis, say on credit basis, and the remaining 40% on cash basis. Okay, so on credit sale there, I put an equal sign, go to pick on the column for total sales, that is here, B11 here in January, and then this one I multiply by, we said credit sales should be 60%. Enter. So I have made the credit sales to be 60% of total sales. And let me drag this formula throughout. Fill. Let me drag this throughout because it is true throughout the planning horizon. So we have modeled credit sales. Now let us go for debtors collection. The assumption here is that we give debtors 1 month credit period to settle their credit purchases they have done with us. Okay, so the credit sales offered on January will be settled on February. So that is the assumption. So January we are just starting, February is the first month, and I put the formula here. So put equal to, and then click on credit sale for January. Here, this is the collection. The January credit sales will be collected or repaid in February. But we assume that a further assumption that 2% of the credit sales will turn out to be bad debt. So that means we are expecting to collect 98% of the credit sales, and 2% will be bad debt. So instead of picking the full figure for January and then I multiply it by 98%, that is the one that will be collected. 2% will be bad debt. So I put that formula, and this formula is going to be true the rest. So I tap to open the local menu and choose fill option, and then drag this to the end of the projection period. Okay, so for bad debts, as I said, is 2%. So put equal sign, click on credit sales, and then multiply by 2%. 2%. Enter. And this formula is going to be true to the rest. So I tap and then fill to drag this to the end. Okay, so closing balance here, closing balance now will be, put an equal sign here, opening balance plus opening balance plus credit sales minus debtors collection minus debtors collection minus bad debts. That will be the closing balance for debtors in this case. Okay, you take opening balance of the debtors, you add credit sales that have been done during that month, you minus collection that has been paid by the debtors, you minus bad debts, and you end up with the closing balance for the debtors. So this formula, I'm going to fill it, closing balance formula, I'm going to fill it throughout. Okay, once I put an opening balance on top, this will be okay. So opening balance here for February is a closing balance for January. So I put a equal sign to pick the figure for January here at the opening balance for February and press enter. And this one is going to be true throughout. So I tap to what's wrong with that? Let me remove this first. I am going to tap this. Why does it not want to? Yeah, so I choose fill and then copy this formula throughout the planning horizon. So we have already established our modeling for the debtors. Now what follows is to incorporate these items into our financials. Let's start on the cash flow. So far we have taken cases as all the sales we have done. Okay, if I click on January B4 here for the January figure, you will see that we have taken P&L B3. So we have taken the whole sales figure as cash. Now we are going to change this, and instead of picking from P&L sheet, we are now going to pick from workings sheet. So I click on here I edit this, not editing really, let me remove this. I just double tap to open the go to this option. Let me remove this first, and then I click on workings, equal sign to put a formula. I go to workings, and then on the sales, on the sales figure here for January, here I multiply this by, we said credit sales is 60%, so cash sales is 40%. So I multiply by 40% and press enter. Okay, so our cash sales now is 40% of total sales. So I am now dragging this by tap and then fill, drag this to the rest of our projection. So that is our cash sales modeling. And we have to now add here, insert a row here for debtors collection. Edit. Debtors collection. Which will be, I put equal sign and then go to workings. For January, debtors collection is here on the January area here, and then press enter to accept that, and then we drag this also, fill this, what's wrong, fill this and then drag this to the end. Okay, so we have already incorporated debtors collection in our cash flow. And the other item, we have adjusted cases, we have put debtors collection. Up to now, definitely the balance sheet will not balance. As you can see on the check area, the balance sheet is not balanced because we are not finished yet with this new modification for debtors. So we are done with cash item, we are done with debtors collection. Now we need to do on the bad debts. This one is going to be captured in profit and loss, so I click on P&L sheet, and then add here in administrative expenses, I add an cost item in the name of edit, in the name of bad debts. And then in January I put equal signs, and then we'll go to workings and pick the figure for bad debts for January, which is here, and then enter. And this one is going to be true throughout, so I tap to fill. Throughout the projection period. So we have already captured budget. And one last thing is in balance sheet. Okay, as you can see, the check, we still have difference in our balance sheet because we haven't yet accounted for debtors. So normally debtors are arranged after cash before closing stock. So I insert a line there between cash and closing stock, the figures that we have thus far captured in our balance sheet, insert a row, and then on that row I write edit to write debtors. And here in January I put equal sign, go to workings and pick closing balance figure for January here, press enter, and then drag this throughout the planning horizon. Yeah, so after that, you can see our balance sheet has balance because the check here we have all zeros, so the balance sheet has balance. So we are done with the modeling of debtors. Okay, we are done with the modeling of debtors. Let me out of it, click on the top left corner to select all here, and then go to this sheet option, format size, out of it column width, so that we see each and everything. Okay, fine. So we are done with the modeling for debtors. Now let us go to do modeling for creditors. Okay, so we are doing now is creditors. So it's opening balance again, opening balance, add credit purchases, and then debtors collection, this one with less, debtors collection, creditors repayment, creditors repayment, when we repay the credit we have been offered by our suppliers, and then closing balance. Of course, you don't model for bad debts on repayments. You don't expect to not paying your suppliers, so there's no bad debts modeling. So here, after repayments, we need to have the last one for closing balance. And for creditors, so let's go and pick credit purchases, put a equal sign here. So far, all our purchases have been modeled to be on cash basis. So I click on purchases on January here on B15, and let us assume that 80% of our purchases are on credit basis. So multiply by 80%. 80%. Okay, enter. So those are our credit purchases, and this one is going to be true throughout. So I tap to fill this to the rest of the projection period. Okay, now since we have changed our assumptions for purchases, let's go to the cash flow sheet here. Our earlier assumptions were all purchases are on cash basis, so we picked them on that. We picked them on workings, but we assumed all of them are on credit basis. And in this case now, instead of, I click at the end of this and then multiply by we have said credit sales are 80%, so 20% should be cash sales out of total purchases. So I put this formula and then I drag this to the rest by filling it. Okay. And we have started with a negative as usual, so that to show the fact that the purchases draws out cash from the business, from our cash flow, as we did earlier. Okay, so we have already accounted for cash purchases, and we have already modeled our credit purchases. Now let us model for repayments. Edit. So for repayments, let us assume that we are also offered 1 month credit period to settle for the credit extended to us by our suppliers. So the purchases for January will be paid in February. Okay, so I put equal sign and then pick here. Okay, let us capture this on credit basis, I mean on negative format. So I put negative number first and then click on January figure, so that the creditors repayments, because it draws out cash, let us represent it by negative number. So we have captured that, and then let us fill this throughout. Okay, and our closing balance now will be a function of summing all these: opening balance plus credit purchases minus creditors repayment, because creditors repayments are already reflected as negative numbers, so we simply sum all of them. Okay, let me put here just 0 here so that our formula can pick from top. Summation formula can pick from top. Okay, so check out. So this is my formula, and then I fill this to the rest of the projection periods, summation, and one last thing on opening balance for February is closing balance for January. So I put equal sign there and pick this closing balance for January as opening balance for February. So press enter and then drag this field to drag this to the end of the projection period. So we are done with our modeling of creditors. We have already reflected credit purchases as 20%. So we have already adjusted for that. We don't have creditors repayment, so I'm inserting a row here on top of salaries and wages. I'm inserting a row for edit this for creditors repayment. I click on January and then put an equal sign, go to repayments draws out cash, and because we have modeled repayments as negative, so I don't start with the negative number here. So I'm simply put equal sign, go to workings, and then on January, let me go to January, back here, creditors repayment, I pick this one. Okay, press enter, and I'm going to tap to open local menu and then click fill to drag this formula till the end of our projection period. Okay, so after doing all those, there is one item remaining for our balance sheet to balance. If we go to balance sheet, when you see on the check here, it's not balanced yet, and this is because we have not yet accounted for creditors. So they are in the current liabilities section of the balance sheet here. I put edit, put creditors, and then let me go to put an equal sign, click on workings and January here. So creditors, this is our closing balance. I pick here on B31, that is the closing balance for creditors as we have modeled here. So I press enter, and then this one is going to be true throughout our planning horizon. So I'm dragging this till the end of our projection period. So it has already been captured on the current liability, and our balance sheet now have balanced. As you can see, the check, we don't have zero here. Okay, so we are done with that assumption. We are done with modeling of creditors and of course debtors. Now let us look for one more before we close this, and we will do others in the next lesson to save, so that this lesson is not going to be too long. Okay, and let me now go through our P&L and see what is the next item we need to modify its cash flow. Rent. Okay, normally you pay rent on here in Tanzania on annual basis. Okay, and we have accrued our rent on monthly basis in the profit and loss account. This is how it's supposed to be done, accrual method. Okay, now we need to change our cash accounting for rent. Instead of capturing it on monthly basis in the cash flow as we did for rent, here you see 500 on monthly basis, we now want to change that. So we go to workings here, and then create the computation for this one is called advance payments. So rent. Let us type rent here. Rent. We will start with opening balance. Opening balance. Opening balance, and then rent paid, rent expenses as captured in our profit and loss, and then here cash paid for rent, and then we end up with closing balance. So the rent figure here, we put equal sign, go to profit and loss in January, and we pick here for rent, that is January, enter, and then we drag this to the end. We fill this to the end of our projection period to show how the rent was captured in profit and loss on a monthly basis. And then cash paid. Now, as I said, we have started to lease the shop in March. So by the end of February 2023, that will be a duration of 12 months. Okay, so if we rented in March, that means we have paid them in February, so that in March we can be in. Okay, so we have paid them in February. So I put a formula here for sum. I click on sum here, and then I sum from this one let me drag this. Oh, sorry. Sum from here up to February. Oh, it's going to give me problem, this Android stuff. Well, maybe let me put sum from here March up to control. I don't know how to use control. Let me see if I can use this one. It will not. Let me press control here and then try to move this. It's not working. Well, I will look out how to do it simple, and then we will do it again. But in the meantime, what I can do is, instead of using a sum formula, let me just put cash paid there in February. So edit, use this one, I put equal to, and then I take that one, the first one for March, and then use plus. Oh, there is still the formula for sum. Let me remove this. So cash paid, because we are paying cash, we should start with the negative. So I start with negative, and then I click on March figure, and then because I want my last product to be on negative, so minus this one for April, so I'll go on like that one, minus this one, 1 2 3, so that I have already accounted for 3 months, minus for 4 months, minus 5, minus 6, minus 7, minus 8, minus 9, minus 10, minus 11, minus 12. So these are 12 months, okay, up to February. So I press enter. Okay, so in February we will pay Tanzanian shillings 6,050,000 for the rent, to cover the rent period from March up to February. And we are going to repeat this one to be true each February. So I click on this, and then I copy this one. Let me tap here. Open the local menu, use copy, and then go to February. Go to February. Let me open the, go to February, December, February here, and then paste it. Go to February again, February here, open this one and then paste. Oh, what's wrong? Paste. Let me repeat this formula again. I picked a wrong one, so let me come here and then copy this, and then come to February here, then paste, come to February again, February here, paste, look out for another February here, then paste. So this is our final February in our projection horizon. Okay, this formula is not okay because it just picks 878, so there must be an error. Let me repeat on this one. This one was 6 million, was right. This one was also right. And where did we, this one was also right, 6 million. Where did we do? This one was also right, 6 million. So it's only here. Now let me copy this one, and then paste it here. Okay, it's fine, because we have only 2 months left here. Okay, so it's fine the way it is picked or paste. It's okay, because only 2 months left for during our projection, so it's summed up only for February 26 and March 26. So we are done with our assumptions for advance payment on rental, and now we come to model the closing balance. We put edit here to put a formula. So we take opening balance, we use minus, we click on rent, we click minus, click on cash paid, and then enter. Okay, so that is the formula for deriving the closing balance on rental payments. So I drag this to the end. You will see the logic of this formula. Why did I do minus after we have concluded on where did I go? Just want to finish the last portion. Paste. Okay, so let's see. We have made our cash advance payment on February 22. So the cash paid was captured as a negative figure. After applying our formula of opening balance minus rent minus closing balance, we ended up with a closing balance of positive 6 million. This is advance rental. So you can see why my formula for taking opening balance plus monthly rent plus cash paid, which is paid in advance in this case, closing balance should give us our advance rental payment. Let's conclude by putting the opening balance formula here equal to opening balance for February is the closing balance for January. So I put this one and tap to fill the rest of our projection period, this opening balance formula. I didn't drag it to the end, so let me finish this up to here. Okay, so now let us see how our modeling of advanced rental looks like. So in February we have paid 6,050,000 Tanzanian shilling as advance for rental for the whole year starting from March. So each month you can see the advance rental is reduced by 500,000. This is the portion for monthly rental. So you can see the advance rental balance is reduced by 500,000, and by January you see the closing balance is only 525 in this case because of inflation adjustment for the figure. Okay, but if we are not have the inflation adjustment, our balance here would completely be extinguished by the end of that period. Okay, so this is how we have modeled our rental payments. And now we are going to adjust our cash flow. I click on cash flow sheet here. For the rent, our early assumption, we pay them on monthly basis. So we are going to change this and instead pick a figure for January. Let's click on equal. Let's go to this tab, click equal sign, and then clicks on workings, and then cash paid for January. January is here, cash paid. Okay, so enter, and then I drag this formula to the rest. So instead of monthly payment as we see right now, we will see the changes, that our cash outflow from cash is only on annual basis. So start with February. We'll pay rent of $6,050,000 for the first year, and then the other payment will come in February 2023, another 6.3 million. Of course, these are adjustments for inflation, so that's why the figure is increasing. And so each February of the year is where our cash will go out to pay rental payment. So this is how this cash flow modeling is so much important, because it reflects the expected cash flow pattern from your business, instead of the traditional way of modeling cash flow that starts from profit before tax, and then you add back non-cash items, you adjust for non-cash items, add back depreciations and stuff like that. But this one is a transparent cash flow that only includes cash items in the cash flow. And in fact, this is the only presentation the bank will accept when you model overdrafts. Okay, they will want you to show your cash flow projection this way. Unfortunately, I don't think there is much attention paid in our academics about this cash flow. Of course, I'm old man right now. I'm 58 years old. I finished University of Dar es Salaam back in 1992, but I can remember by then there were no much emphasis on this type of cash flow. And no wonder to say that people are, even today, because I'm sure and I know I am living with qualified accountants, some with CPA, some with masters, or both, or even PhD holders, but they cannot model financials, because this knowledge you need to really be in the environment in which it will encourage you and it will facilitate you to learn. For example, in my case, I've been in the banking industry. I've worked with Bank of Tanzania on bank supervision department for a good number of years, where our main job while we were going to supervise banks were to review their loans, okay, because there is where a great chunk of money is going out of the bank to fund for the loans. So there is where we had a lot of our reviews. So I've come across a lot of issues and about about the business plan that we are presented there. But I was also, after moving out of Central Bank of Tanzania, I went to Akiba Commercial Bank there as General Manager of Finance. So I was directly in charge of strategic issues, especially when it comes to financials. Okay, so I was the one who was leading the process of development of projected financials for the bank. So I know these issues, and that's why it is very difficult now for many people to do financial modeling, even after acquiring a CPA or masters in accounting. They still can't do that. Okay, so let's go back to our exercise. We have already adjusted for cash flow in the cash. Now what is left is going to the balance sheet and adjust for, in the balance sheet section here. Of course, you will see on the check here it's not balanced, and when you pay rent in advance, that means that is an asset for you. You have paid in advance. Okay, so this is advance rental. So we can put it, let's account it after debtors. Yeah, so I insert a row here and call it advance payments. Edit this, call this advance payments. So that is what we have, and in January, I'm in January there, click equal sign, go to our workings and pick the figure for January closing balance of rent, enter, and then drag this formula, edit, not edit, fill, drag this to the end of our projection period as advance payment. Up to there. Okay, let me finish this one. Fill this for this remaining. Yeah, it's 0 because it takes is extinguished up to this. Okay, so after doing that, if you go to our check, then you see it's 0, 0. That means our balance sheet has balance. So let us end up here for this exercise. We have do adjustments in our financials to incorporate debtors, advance payments, and creditors thus far, and we'll do more stuff later. Okay, thanks guys for listening and watching this. Subscribe as usual. I'm asking you to subscribe so that you get posted whenever I share new video, new tutorial, and so that you should not miss anything out of this wonderful presentation on financial modeling. Of course, definitely no one will give you all this that I'm doing, because people normally would want you to get this training by paying them. So we see most of the tutorials here in YouTube, they just give you a brief explanation about that, and then they ask you to go and pay for the course. Okay, but for me, I'm becoming an old man and sick, so I want to make sure that the knowledge I have accumulated in developing this methodology is left for the rest of the world to use it when I'm no longer here with them. Okay? So, see you guys in the next tutorial. Let us end up here now.